We start off with an earnings alert on Intel. Shares are falling in the after-hours session. The company's call is just getting underway. Josh Lipton's got all the details. Hey, Josh.
So, Melissa, heading into this print, remember, this stock was up about 25% so far this year, and analysts will say a big part of that. High hopes, they say, for new CEO Pat Gelsinger, but the stock lower here in the after hours. Turning to the report, beats on the bottom and the top. For guidance, though, Q2, they say they're looking for a $1.05 in the bottom line. The street was closer to $1.09, though the revenue guidance of $17.8 billion. The street was closer to $17.6 billion. They did raise their 2021 guidance as well. Turning to the segments, CCG business, so chips for PCs, $10.6 billion. Street was closer to $10.2 billion. But the DCG business, so chips for the data center, $5.6 billion. Analysts have been looking for closer to $5.8 billion there. I did check in with Chris Rowland over at Susquehanna. There was upside for Q1, he says, but that Q2 guidance is either conservative, he says, or suggests a slowdown in the business. The data center business, he said, did disappoint versus expectations. That segment is the one that investors value the most, those higher margin server chips. On the call, Chris told me he wants to hear more details about Pat Gelsinger's new strategy, his outlook for the back half of the year. Chris does have a neutral rating on Intel. Gelsinger has his work cut out for him, he says. For much more Pat Gelsinger, you want to listen tonight to Mad Money. Jim Cramer will be interviewing the new Intel CEO, so tune in for that one. Melissa, back to you.
That will be a must-see. Josh, thanks. Josh Lipton, who'll keep us posted on the conference call, by the way. Guy Adami, how do you trade this one? You heard the comments given to Josh by Chris Rowland. Stacey Raskin of Bernstein also was on Closing Bell earlier, and he said that he thought that it sounded like effectively Intel was guiding down for the second half, although he'll want some more color on this. So a slowdown potentially starting in Q2 with a potential guide down in the second half embedded in the guidance that they've given.
I know. I can tell you, if you had started with Karen, that's what she would have said. If you look, I mean, a big beat in the first quarter, I think a 24-cent beat, but she didn't have the commensurate guide for the year, right? They only raised their guidance by 5 cents. So the street is saying, wait a second, what are they seeing in the back half of the year that they obviously are not seeing right now? I mean, the quarter was very good. You take this quarter in a vacuum, I think it's a very good quarter. I mean, operating margins are down year over year, but at 32%, better than the 30% the street was looking for. People will look and say, you know what, 13.5 times, it's not expensive. The stock has sold off from that previous all-time high last January that we flagged early in April at 68.5. And at this 61 level, it makes a lot of sense. The concern is going to be the guide and and why didn't they guide commensurate to the beat they just saw? That would be my first question, to the extent that I would be allowed to ask a question.
You just asked the question. But Karen, in terms of what I go to you because we often say that a CEO's first foray on an earnings call, you take the guidance down explicitly. Gelsinger did not do that. He didn't do that in the update when he unveiled a $20 billion plan to build 2 new plants in Arizona. He didn't really do it tonight either, although some analysts are drawing that conclusion. It was actually pretty soft in terms of if you thought he was going to take this opportunity to throw out the kitchen sink, he didn't really take it yet.
He didn't take it yet, but we don't know if this is conservative. This is a little bit of sandbagging, if we just switch metaphors from kitchen sinking it to sandbagging it, which is light guidance. And I understand anybody in this environment wanting to be conservative about guidance or not wanting to give guidance at all. I always give management a free pass for this year, and I think companies should do that in general, not have to give guidance. But you know, it wasn't, all in all, it wasn't a bad quarter in that here's a stock that trades at, Guy just talked about how low the multiple is. It's not like it's super frothy here. We all know there's a lot of competitive headwinds. Data center, of course, that's disappointing. But I'm kind of on the camp that maybe they're sandbagging just a little bit.
Yeah, they could be. Certainly they could be. But data center's data center. And on a volume basis, it was down. On a revenue basis, it missed. Banu, what'd you make of the quarter overall in the guidance?
Well, I think the other two panelists made good points about the guidance, right? But it's new leadership, and we want to really allow there to be an adjustment for what type of cadence and guidance and the way that he kind of wants to maneuver there. So I'm willing to kind of give a mulligan there. When I drill down and I look at the gross margins and the data center revenue, right, those two things were kind of points of concern for me, particularly when you overlay that with the fact that they have made a commitment to $20 billion in capex, right? So you've got to have operations that adequately fund that new commitment to manufacturing and pushing forward and kind of rolling out this new strategic plan. So those two things were somewhat of sore spots for me. Keep in mind that this stock has really made, as Guy says, this textbook up and to the right move from 45 back towards that $70 level. So like a lot of the other names that we're seeing, there is a bit of sell the news. But again, those two spots would be where my focus is.
And I guess that's the real question here, and that is a 23% run year to date reflecting already all the good news that Pat Gelsinger can bring for this stock and for investors to this point? It may be even given him a little bit benefit of the doubt in terms of execution, Tim.
Yeah, I guess so. I mean, again, I think there's a lot more upside in Intel, and whether this is kitchen bagging or sand sinking, you know, I don't know. I actually, maybe I saw different numbers than everybody. I thought that the commentary wasn't terrible. I think that the current bar is very, very high. They obviously went out of their way to say this was an extraordinary time. It's a record time for notebooks, up 38% on PCs. I also thought I saw, you know, recovery in enterprise and government spending. And so, you know, why go out there and say what you think is going to happen in the second half of the year? This gets into our tea leaf reading, you know, fortune telling, you know, whatever we think the real message is. I'm not sure I care. So I think this is your question, Mel. I'm not sure I care. This story was released in January, and that's we got a pre-release of these numbers. They were a little bit better. We don't know what the second half of the year is. We know this company is back on track. We know they're back committed to innovation. They're spending $20 billion. We know what's going on with Foundry. We know the arms race they're creating, probably with TSM and Samsung, to kind of keep market share. I mean, this to me is maybe the most important chip company in the world right now, and I think it's priced for investors. It's not awful. Let's put it that way.
I think that's a good point that Tim makes. You are invested in Intel at this point, probably not for this quarter, probably not for the second quarter, but probably for quarters and quarters out, maybe years out at this point. And the key question here is, can Intel execute on the grand plan they unveiled just a matter of weeks ago? And a big part of that is, can they, in fact, as Tim had mentioned, compete with Taiwan Semi, which just last week raised their capital spending forecast by $30 billion. This is an arms race, Guy. And can Intel compete?
Yeah, I think they can. I absolutely think they can. I mean, we heard his vision a month or so ago, or, you know, 3 or 4 weeks or so ago. I'm with Tim. Listen, in my opinion, if they had just reported the quarter and said nothing about full year guidance, you know, people saying why aren't they guiding notwithstanding, it's a $65 stock just based off the quarter. I think my concern and the reason why the stock is lower is because, again, the full year guide doesn't line up with how much they beat here in the first quarter. With that said, I do think you can make that bet. And, oh, by the way, they probably have the heft of the U.S. government behind them in some way as well. So at 13.5 times earnings, I don't think you're taking that much risk to make the bet that you just outlined.
That would be a big plus for the stock if for some reason, if on the conference call, Gelsinger actually talked about taking government money potentially to help fund these plants in Arizona, which they didn't mention when they first announced these plans. Karen, what do you want to hear on the conference call?
I guess I want to hear, that would be one thing that would be of interest, of course. But it's like you just said just a very short while ago about, it's not about this quarter or next quarter. It's about, you know, how is this arms race going to shake out? Remember, a lot of people are looking for arms, right? So I think there's some room there for not just, you know, one winner. But I think that at 13.5 times, he's got a little bit of room to take time to spend money, which he obviously said he would do, which hopefully he's a good steward of capital, which I believe he will be. And I'm just going to sit back and watch. I don't own it now, but at this level, I mean, in the value spectrum, it's definitely on the value side of the space.
All right. The conference call's 10 minutes in. We'll keep you posted on any developments. The stock is down 1.6% right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.